Flexibility plays a really key role in building our resilient media strategies today. It's really important for a couple reasons. First off, I would just say in a world of economic uncertainty and clients' businesses, not being predictable, it's important to have flexibility to shift or cancel money if needed or add money, conversely, if business is doing well. But also as media channels evolve, as consumption evolves and there's new innovations and ad opportunities arising every day, it's important to be able to have the flexibility and be nimble to shift and take advantage of those new opportunities when they come, as well as to optimize and understand when something's not working, being able to pivot and invest more in something that is working.
So a lot of shifts in CTV right now, as well as retail media. How are those 2 points changing the way you allocate investment across channels?
I think with retail media in particular, when it started, it was really a display-heavy medium. It was a place where people could go and just see, promotional ads and click to buy. And now the retailers and the retail media networks have really innovated in that space. And I would say there's been more of a shift into CTV because now it's not just about running endemically within the actual retailer site itself, but rather kind of running off-site and using their data to target consumers in other places. And in particular, the data has been really useful in CTV. A lot of the retailers are creating partnerships with different CTV platforms where you can uniquely use that retailer's data to target based on purchase behavior. And I think that's a really interesting way, especially for CPG advertisers, to leverage that data. With CTV, I think we're just starting to see, I know there's a lot of conversation around FAST, but we're starting to see more money shift there as consumption is growing, as well as into more new and innovative ad formats. I'm especially interested in the contextual advertising opportunities that AI is offering with a lot of different platforms.
So would love to hear you drill down a bit more about the appeal of FAST and other formats. What's driving that, and in particular, do you view FAST as a particularly unique and critical channel compared to other ones?
So I think it's important to start by first saying that I think FAST is, misnomer is not the right word, but I think it's too broad of a term. And by definition, it means free ad-supporting streaming TV. But there are many different platforms that, when people say FAST, are comprised in that, but I think they're very different. So FAST can either be the live TV guide-like channel, something like a Samsung TV Plus or Pluto TV, but things like Tubi and the Roku channel are also considered FAST, even though those are more, original content, library on-demand viewing experiences. So I do think in the future there's an opportunity to rethink that classification because consumers see them differently and advertisers see them differently as well. But regardless, consumers are seeking more value. They're seeking more ways to stream and get access to content for low or no cost. And so FAST, whether it's the on-demand or the live TV guides, are really giving consumers that opportunity. Between cable prices and streaming prices skyrocketing, it's just another way for people to get good content. So as we see consumption growing there, because of that, it's just more opportunity to get efficient scale against our audiences.
Efficient scale being a very important thing. So with that in mind, and with the flurry of ad formats that you just alluded to, what new measurement tools are emerging right now, and how are you evaluating ROI and future-proofing future media spend?
Yeah. ROI, really, that measurement itself hasn't changed very much, which, for better or worse, it allows you to sort of see trends over time, but I'm not confident that a lot of ROI measurement has fully caught up to some of the new channels. We see CTV continue to underperform relative to linear TV, and there's many reasons why, but sometimes seeing those numbers can discourage a client from investing in that channel when everything tells us that, to your point about future-proofing, we need to be there because that's where consumers are. So to that regard, sometimes it's getting ahead of the measurement. It's saying we need to invest there now so we can create that long-term association, even if we know it's not going to move the needle immediately. So balancing ROI with some of the other brand metrics or KPIs, things like consideration, awareness, favorability, et cetera, are ways to understand some more of the long-term brand health metrics that could be driven, if not, or in addition to short-term ROI. And then I would say there's other things, some of the other measurement is better helping us diagnose what is and isn't working from an ROI standpoint. One thing that's been really useful of late is seeing cross-screen measurement and being able to understand what the overlap is between your linear buy and your CTV buy, or even within CTV, understanding overlap across platforms. So we can really factor that in and make sure that when we're buying, we're either utilizing that duplication to its advantage, or we're buying to really ensure there's incrementality in our buys.
So alongside looking at various measurement tools and ways of gaining greater efficiency, I'm not sure if this is a crystal ball question or a wish list question, but wanted to get your sense, Marcy, of what emerging investment strategies are you closely watching and expect to be closely watching in, say, 2026?
Yeah. I don't know if this is an investment strategy per se, but live sports continues to be, I think it started as the one main thing in linear TV that continues to attract eyeballs, but as it shifts into streaming, live sports just in general is something that is really prevalent both from a video consumption standpoint, whether that's live games themselves. A lot of younger consumers are following highlights or talking about it. There's obviously gambling. So just really understanding the best ways to invest in live sports, to be part of that cultural conversation, be where consumers are spending most of their time and attention. So that's a big one. And then just really staying on top of the trends with CTV, not just in terms of consumption, but all the different ways that ad opportunities are evolving and making sure that we're evolving with them.